So this is the each red shelf that I'm gonna use for ebook. The ebook we are using is 2023 edition. So I'm gonna open that book. And if you have the physical book, much better. But ebook has its own.
Correct?
Yes, that's good. Okay, so that was chapter 1 we were looking at last time. And we were looking at basic tax formula. If you remember that, we said we have income from all sources, obviously, minus exempt income. Something might be exempt from income, let's say municipal bonds, state bonds. Those are type of bond interest that you receive, but is not taxable, let's say, for federal purpose. So anyway, income from all sources minus exempt income, it gives you gross income. And gross income minus some deductions will provide you the taxable income, so you can put that taxable income using the tax table, which is at the end of your book if you have the physical book. There are a bunch of, it's page T something, and it's called taxable tax tables. It's somewhere at the end of the book. Starts with T. Yeah, tax tables, appendix T. And you can calculate the taxes using that table. There's also another way to calculate taxes, which is the percentage. So if you are using taxable table, there is a income limitation, I believe up to $100,000. If someone is making more than $100,000, then normally the tax percentage will be used instead of the table. But table works up to $100,000. That's on end of your book. You can even Google tax table for 2022 and you might be able to find it, or go to ebook and go to the page and click tax table. So let me see if I can find it. 2-1, let's see. There you go. So here is the tax table. And so if you have income, for example, let's say $2,000 up to 2025 in this line. So if you are a single person, your tax is $201. And it is same thing for married and filing separately and head of household. Same thing is going to go all over. So that's just 10%, right? That's 10% of your, that's the lowest tax bracket that we have, 10%. Anyway, so if you go upper on this page, you will see higher income, and you can go all the way to $100,000, $99,000, and you can see that you can easily calculate the tax. So, for example, if you have income of $36,000 on this page, up to $36,050. If you are a single person, your taxable income will be $4,118. The reason the number is more than 10%, because up to a certain threshold, it is 10% tax. But if you make a little bit more than that threshold, the next category is 12%. That's why you get charged up to certain limit for 10%, and then your tax bracket will, any dollar after that will go 12%, right? Not the whole thing 12%, just anything above that threshold will go 12%, and so on and so forth. So you will have more taxable income. So anyway, this is a general information. Honestly, I never use this. This is just for one-time event. You just learn it. Your software will do it for you. So you don't need to waste energy on calculating this, because normally we don't do manual tax calculation.
Well, who is the head of a household?
Head of household is, let's say, someone is a single mother. So a single mother is a head of household.
So instead of filing as a single person, she gets to pay a little less because she's the head of a household.
Yeah, head of household and has some other benefit, like standard deduction is higher. Yeah, so you want to be head of household. The best thing you want to be is married filing jointly, right? So if you are not married with your husband, then you are alone, like single parent, then you will become head of household. Married filing separately is the worst. Married filing separately, you lose a lot of benefits. So that's the last thing you want to do. In a very unique situations, you might do married filing separately. Maybe. I've never had a client like that. Yes.
Question, because I have a client right now. So let's just say, like, at her job, W-2, she has a refund coming. But in his job, he's gonna owe money. Wouldn't that, in that scenario, be better that married filing separately? That way it doesn't affect the refund of the spouse.
Okay, IRS is smarter than you.
I'm sorry?
IRS is smarter than
No,
you.
I understand.
So when you go married filing separately, you're gonna lose some benefits.
Okay.
And end of the day, you can try, as I said, in very unique situations, it might be better for filing separately, married filing separately, but again, very unique situations. Because if you try, you will see that you end up by being in a worse situation compared to married filing jointly. So IRS is smart enough to put enough things in between so people don't try to trick anyone.
Okay.
But again, there might be in unique situations, which I've never been in such a scenario myself, maybe filing separately is better.
Okay.
Yeah. Yes.
So if a couple is separated, they're still married, but they're separated, living separately, and one of them has kids, can they be head of household then? Or do you
again, yeah, if the one that have kids and his kids are living with her, kids are living with her, so and she's providing more than 50% of support, then yes, then that's but even in that situation, maybe 1 year mom says, you know what, even though kids are living with me and I'm providing more than 50% of support, but I'm gonna give you permission to claim your children as a dependent for this year as a favor. I don't know if that happens, but normally mom not gonna do that. They help with husband who is living alone, right?
Kids, they each get to claim a kid too, right?
Yeah, kids, again, there's a scenario that it says, how long have you been living here? Who is paying more than 50% of support? So sometimes kids are living with mom, but dad is paying more than 50% of support. So in that case, they have to decide who's gonna claim those kids. If both of them are claiming at the same time, guess what? The tax return will be rejected. So whoever claims first, it might go through, the next one will be rejected. So it's better to talk to each other instead of being in fight. Like example happened is someone came in last year VITA program, says, I want to claim my mom, I believe. And we said, okay. So we filed it and we got rejected. And then we realized that mom has filed her own tax return alone, claiming herself as a standard deduction. And now son was here trying to claim mom and got rejected. Anyway, so that's so we are going to chapter 1. How do I go to chapter 1? What page was that? 101. 1/4, let's say. Okay, one something. 1-5, let's say. Okay, question? I saw a hand.
Oh, yeah. So can dependents only be kids?
No. Dependent, no, it's not just kids. If we go through chapter 1 right now, we might see that. Yeah, let's go through that. So anyway, this is the taxable thing that we were talking about. Already, let's go to the next page. One thing that also I talked about last time, I said we have two type of deductions, let's say deductions for AGI and deductions from AGI. In order to understand this better, I like to take you to Google, and you can Google, I'm doing it for you, Form 1040. So Google is gonna be a very useful friend to you. So here is Form 1040 from irs.gov. So I'm gonna go to that. It's for year 2022. Year 2023 is not ready yet, so we are still, whatever we are learning is year 22. Year 23 will be ready somewhere, maybe end of November, I believe. But for now, this is the year 22. So let's focus a little bit more. So here we go. At the top, you need to understand this Form 1040 in and out. So start looking at it. Print a Form 1040 or look at it on your screen and make sure you all know what's going on. So at the top, you have to choose if the person is a single or married, filing jointly, married, filing separately, head of household, or qualifying surviving spouse. Head of household, I told you already, that means a single parent with a child, that's a head of household. But what is qualifying surviving spouse? If the man, husband and wife are married and one of them dies during the year, that year they will file married filing jointly, okay? But the 2 years after that, let's say husband died in 2022. So for tax year 2022, wife will file married filing jointly. But for year 23 and 24, if they have children, so instead of being head of household for wife, she can still use this qualifying surviving spouse and have the same benefit as married filing jointly. Make sense? And after 2 years, it will become head of household at that point. So husband dies in 2022, that's married filing jointly. 23 and 24, it is qualifying surviving spouse with children, obviously. And 25 and after that, 25 and after will be head of household. Assuming she doesn't get married, okay? If she gets married, then forget about surviving spouse. It's gonna be married filing jointly again, okay? If she doesn't have children and the husband dies, then in year 22, husband died, that's okay, that will be married filing jointly. But in 23 and after that, they don't have kids, so it's gonna be single. Okay, so surviving spouse, it's gonna help you only if you have kids, okay? Otherwise, you become single. You need your name, last name, social security numbers, address, right? As you see, this presidential election campaign, it's optional. If you like to say yes or no, that's fine. But it's not gonna come from your pocket. So don't think, oh, I'm gonna pay for this. No, you're not. You're just saying, please contribute. Government is contributing that. So don't worry about it. It's just ask your client if they want to contribute or not. And let's keep going. So very, very important questions nowadays, which it says digital asset. You have to ask this from your clients every single time. Do you have any digital asset? Do you have it? But the point is, did you have it and you sold it? Or did you have it and you used your digital asset to get a car or to do something with it?
What is it? What's a digital asset?
Bitcoin, like those type of things.
Oh.
Yeah. Let's say someone says, oh, yes, I have Bitcoin. Okay, good. How long do you have it? Let's say 5 years. Good. Did you do anything with it? No, still I have it. So the answer is no. But as soon as he says, oh, yes, I use that digital asset, Bitcoin, to buy down payment for a car. There you go. So he did something with it. Or he says, I sold it.
Or you bought it. Or you bought it, right? Anything.
No, purchasing is not the issue at this moment. Did
Only
you?
if you're receiving it as a reward.
As a reward, that means you got free money, right?
Okay.
Or you had it, but you sold it. Or you had it and you gave it up and got something else in return. So at that point, you have to say yes. So if you have digital asset, tell to your clients, you need to know when did you buy it, how much did you spend for it, and you need to know your basis, right? The basis, that means how much is the original cost. Because the moment you say, I sold it, we will figure out how much you sold it, fair market value, and the difference will be capital gain or loss. Okay, so it's very important subject. IRS is very picky about this. Someone can claim you as a dependent. If you say yes or no, you have to answer that. Okay, it's very important again. If you are blind or above certain age, you will get additional standard deduction, so you have to answer this. But in general, when you enter your information in the software will immediately figure out that you are over certain age. But the software doesn't know if you are blind or not, legally blind, okay? You have to have medical proof for that. So if you are legally blind, then you have to answer that question because software doesn't know. Software can just figure out your age, obviously, but not your blindness. Let's go. Dependents, as you see here, those are dependents that you have to list them and you have to say what the social security number is and what's the relationship and if this dependent will be qualified for child tax credit or credit for other dependents. Credit for other dependents are $500, but child tax credit, again, you answer yes, but the software will look at the age to see if they, even though you say yes, but software will look in that age to see if age makes sense or not. Okay, let's focus on the income that we were talking about. So all your income, they go in that lineup. So we have W-2 income. So you get all the W-2s from your clients and you enter all the W-2s one after another. And the W-2 has all those boxes. Remember I said all those boxes, every single number in every single box, you enter it, you put a check mark with a pencil next to it. After all box numbers are correctly entered, you put your initial at the top of that page to prove that this whole page is already entered. You don't want to enter the same thing twice, right? That will be crazy to do it. Or you miss anything in one of those boxes. So every single box, check, 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 check after you enter those information. So by looking at those page, you can see your initials, you can see your check marks. That means everything is entered. Any other income like household employee wages not reported, tip income not reported somewhere else, Medicaid waiver payments not reported on Form W-2. That's again a form of income. Medicare waiver payments. We talk about it later. Not like that's too. It's gonna be too much complicated. Taxable dependent care benefit or anything like that. Employer provided adoption benefit. If you get a benefit from your employer, it might be taxable. Depends how much it is. Wages, other earned income, non-taxable combat pay, blah blah. So you keep going. But the common one is this one again. If you have dividend, qualifying dividend, tax exempt interest, taxable interest, pensions, annuities, social security. And let's say social security here on line 6A. Normally social security will be not taxable to some degree unless you have other income. And then combining other income, you go above certain threshold, and then there is set of calculation, which again, software will calculate it for you, but there is a way to calculate it in one of these chapters in the book. If you want to learn the manual way to do it for maybe, let's say, enrolled agent exam purposes. But other than that, normally you don't calculate this, you just need to enter it. Capital gain or losses, you're gonna use Schedule D. So Schedule D, as soon as I say Schedule D, you need to understand that's capital gain or loss that you report. And one of those Schedule D capital gain or loss thing is about your digital asset. You bought it for $1,000, you sold it for $1,200, there you go, you have $200 capital gain.
So chapter D is capital gain?
Schedule D is capital gain or loss report, yes.
Capital gain is 1 year or more, right? Usually 1 year.
Okay, if you buy it within a year and sell it within the same year, 12 months, then it will be long-term, short-term capital gain. If you buy something and keep it longer time, and you have to enter all those dates. Remember I said you have to have all the information. When did you buy it? How much did you buy it? So when you have longer than a year and then you sell it, then you get long-term capital gain, which is more favorable in regards to paying taxes. You pay less tax for that. So longer capital gain is more favorable. Short-term capital gain, normally you have higher rate. What else? Let's say you have a portfolio of stock and you sold some stock, you bought some stock. So again, depends when did you buy it, when you sold it, it's gonna be either short-term or long-term, and then it's gonna be some form of capital gain or loss in that situation.
But does that come to you on a form from your stockbroker or something?
Yes.
It's a form that you'd be provided with and you just be plugging in numbers.
Yes, it comes and there is a summary page, the first page, and you have the summary, and you can just use that summary to, because maybe you bought thousands of stocks and sold it, which the whole report is 25 pages, but we go just with the summary part and we enter a summarized of things that it is categorized as short-term and long-term. It is in that report. So you just enter it the way it is. And because it says many assets like stocks or whatever, so what date do you want to enter? You just choose various. So you choose various, that means thousands of stock, I bought it, I sold it, God knows what date, but this category is short-term, and for the date you enter various. And then sold date, is end of that year, December 31st, 2022. The purchase is various, but sold is December 31st, 2022. So that's the part. And then you recognize that in the section that you're reporting the short term and then long term. Okay, if you have any other form of income, you will type the name in the software and you see this dots area, that name that you enter will pop up in here and you show any other type of income. But at some certain point, you might get a report form from
From the casino?
casino.
Okay.
If
Well,
it's
that makes
more than $1,000, I believe, something like that. If you get that form, then you should
Oh, for
definitely
sure,
have to
it
do
would
it.
then, yeah.
But legally, yes, you are responsible to report every single dollar of income you might have from even a babysitting, it's an income.
And a judgment?
Huh?
A judgment? After we receive the judgment?
Depends judgment because you sue someone.
Yeah, you sued somebody, you won, they give you, you get money. I supposed to report that as well?
Again, that depends if it's paying.
Like if somebody's in a car accident and they got hurt, and they got money, do they report that?
Normally, car accident is not because for car accident, you get money for two reasons, either to fix your car or pain and suffering. And pain and suffering is not included in income.
Oh, okay, okay.
But let's say if you sue someone and you want to teach him a lesson and you go to civil court and you get $1 million approved for your lawsuit, then that might be a taxable.
Oh, okay.
Rent and like income from rent would be here too, if you own rental properties.
Oh, yeah. Oh, yeah.
Well, what if
That
you-
is,
If you have a bunch of different things, then, I mean, you can't fit. or
don't worry.
We'll get there.
Software has enough lines for you to line up all your income with different names,
Okay.
and software will calculate the total number and put it over there. And software will provide a additional page in the tax return. All those things that you listed over there as an income, it will be printed, and IRS has access to it to see where this $102,055 coming from. And then it says, oh, those are all listed here. Those are things that I did. Those are dollars that I earned. And here we go, combine these $102,050. Make sense? So you just list that. And it's very good to list even your expenses, right? Let's say you have a business and you want to show the expense. You just say, don't say just business expense, whatever. IRS, you just say just business expense and put a big number over there. IRS says, come on over, let's look at your papers. But if you say, okay, utility expense this much, advertisement expense this much, insurance expense that much. So that's IRS says, okay, this guy is listing item by item, all the expenses with the dollar amount. Most probably has the proof for that. But if he decides to audit you, at least again, since you listed them line by line, he says, show me that, and you show all those expenses one after another to prove your book.
How about his income from cash?
Income from cash, yeah.
Yeah, if babysitting from cash,
Yeah, that goes here and you put it babysitting and whatever, $300, $500, whatever. Normally, if it is $20 or less, normally you don't bother to do that, but bottom line.
I think less than 14,000 a year, you don't have to even file an income tax return.
Yes, of course, but because of your standard deduction, you don't have to. But is it wise not to? No. No. So anyone calls me for VITA program says, hey, I make $13,000. Do I have to file taxes? I said, come on over. Why not? Why? Maybe maybe I can get something for you back as a form of refund. So from my point of view, have to is different story, but should you file it? Yes, you should file it. Yeah. I remember one student said, your Zoom, you said it's optional. That's why I didn't watch. I said, being in my Zoom is optional. I didn't say watching is optional. Watching is mandatory. I tell you so many good stuff in my Zoom. You don't want to miss that. But being in my Zoom is optional, not watching it. After she watched the so-called that optional Zoom recording, she said, oh yeah, towards the end, you said so many good stuff that it was interesting. I said, yeah. Normally, if I have a Zoom, maybe at the beginning, I go over the syllabus or something, but normally I just don't have a Zoom for nothing. I'm gonna throw some good stuff over there. So people who don't watch it, they lose that opportunity. Yes. Okay, so let's go. Schedule 1, other income. You see here, it says Schedule 1, other income. Okay, this is by itself another story, another day. You can just go to Schedule 1. We will go one day to review, but I review Schedule 1 so many times, but again, is it memorized in my brain? No, but anytime I can just Google it, Schedule 1 and see. So there are so many things that goes in the Schedule 1 and the total number goes in here, right? So if I'm looking at the tax return for quality review, quick review, I see something in Schedule 1, a big number, I just go to few pages down to Schedule 1 to just check over those things that is in the Schedule 1 to see if everything that I believe should be there, is it there or not? Or if there is something smells fishy. So you can review the tax return, even you did it, but if I am reviewing this tax return, immediately I'm gonna say, okay, this is 10,000 something. Let me go to Schedule 1. I scroll down, go to Schedule 1 to see what's in the Schedule 1. And if it looks good, makes sense or not. Bottom line now in line 9, you see you just add them up. It's a total income and then adjustment to income from Schedule 1. So now you see from Schedule 1, not only you add something to your income, but you might also in the second half of Schedule 1, you deduct from your income. So here, when I see adjustments to Schedule 1, I will be really interested to go over in Schedule 1 and just look at those adjustments to see if they make sense or not. So anyway, so total income minus adjustment to income from Schedule 1 gives us AGI, which is very important number because so many things in taxation, you start from AGI. So AGI is go-to number. Below AGI, so those are, deductions for AGI, you see? Anything above this is for AGI. But now you have from AGI. From AGI, this is line 12, either going to be standard deduction or itemized deduction. Standard deduction is a set dollar amount that government says, take this number from your income, you don't need to pay taxes for that dollar amount. Anything above that, you pay taxes. So that standard deduction every year is different. You might find it maybe in chapter 1 or somewhere. But it is like, you don't need to memorize it, but it is about $14,000, $13,950, I believe, for year 2020. But anyway, just Google it, you will see. And every year is changing.
It says it right there on the left of the form, how much it is.
Oh, yeah, thank you. So 12,950 for single. And if you multiply that by 2, that will be 25,900. Again, because this is 2022, don't memorize it. It's not gonna be forever. So normally you don't need to memorize them, but as long as you know the dollar amount to some degree, that's good enough. I'm not good in memorizing, so not a big deal. Head of household, it's about 19,400, as you see, again, just for year 22. And if you normally, as of now, because the standard deduction is way too big, so most people are using standard deduction, but there are few people who will do itemization. And in order to do itemization, if someone says, walks to your office and right on the spot says, I forgot my medical expenses, I'm gonna go back and say, wait a moment, do you have a home? No. Okay, I don't need your medical expenses, right? Because if someone doesn't have a home, doesn't have a mortgage, and I'm talking about a big mortgage, then you're not gonna have a big property tax. You're not gonna have enough like mortgage interest. So your medical expenses is gonna be useless. The other problem is for medical expenses. Believe me, you don't want any client to use medical expenses for standard deduction, itemized deduction. The reason is your medical expenses up to 7.5% of your AGI. Remember I said AGI is very important number on your line 11. So AGI, 7.5%, 7.5% of AGI, your medical expenses has to be above that. So if your medical expense, let's say AGI is $100,000. So 7.5% is 7,500. So if the medical expense is more than 7,500, then you might say, okay, I might use a little bit of that. Let's say if the medical expense is 10,000, 10,000 minus 7,500, just 2,500 of medical expense will be used in your itemized deduction. So there is a threshold. And you don't want your client to be that sick to have that much medical expense, end up using itemized deduction. That's not a happy news anyway. Yes, question?
So it has this, anything above the 7.5 can be used as
Yes.
itemized?
Yes, anything above 7.5% of your AGI can go to itemized deduction. And it includes doctor receipts, doctor fees, prescription fees, not over the counter, not cosmetic or something like that. Glasses, yes.
What about parking, or when you have to pay for parking to go to your doctor?
Yeah, that might be.
What was the question? I didn't look up.
Yeah.
Parking to go to the doctor.
I always wonder that.
That might be over there, yeah. But again,
$5.
you're not gonna get to that 7.5% of.
I'm just thinking about every single year I itemize all our medical expenses and I don't think they're 7.5. Like we do it to figure it out, I guess, and give it to the accountant. And then he probably just was like, you can't use it.
Yeah, like for my medical expenses, normally I don't hold on to them because I hope I never get to that point that I have to use that. If I get to that point that I have to use that, then I have much more other problems to think about besides my itemized deduction thing.
Going back to the other example, you were saying that if they're homeowners and have a mortgage, they're more likely to use the itemized deduction.
Yeah, if someone says, I don't have a home, I am a renter, then you say, just come back. You don't need your medical expenses. And normally you have clients, they come so excited with all those medical expenses and you just say them, you don't need it.
I'm sorry, I don't understand. Like, so I do have a house and a mortgage. So then that's why I do my medical expenses.
You might need your medical
Just,
expenses.
it doesn't have to be 7% of your.
Yes, it has. It is
But
more than
the mortgage and all that
7.5%
stuff
of your
needs to be
AGI.
your Income or something.
More than 7.5% of your AGI. If it is, then it might be used. Other than that, no.
So if you're married, it's more than 7.5 of both of the incomes, right?
AGI.
If you're, yeah, both. of
AGI,
the
married
AGI.
filing jointly, you're gonna do this
Right.
whole thing, come to line 9 and you have AGI over there and 7.5% more than anything above 7.5% of AGI. Anyway, the line 13, that's another deduction from AGI, which is QBI. QBI is something new during Trump era. It's qualified business income, which is 20% of your small business that might be qualified as QBI. Let's say you have a business of a small business of let's say $100,000 income. 20% of that will be your QBI. 20% of 100,000, and that goes in line 13. Of course, there is a worksheet for QBI calculation, which your software will produce that worksheet. And the number goes in line 13.
So then what's the difference of qualified business income from Schedule 1? Wouldn't Schedule 1 if you, a small business?
No, if you have a small business, you file Schedule C.
Oh, Schedule C, okay.
Okay, so that's about it. So taxable income after deduction from AGI, which is your standard deduction / itemized deduction, plus QBI if exists any, then you end up to have taxable income, line 15, and that is where you're gonna use that number using tables, let's say, or software will do it for you anyway, to calculate how much tax you owe. So taxable income is line 15, then line 16 will become the tax. So far, so good. We're not gonna go to page 2 for now. We'll leave it again for future, but it is what it is for now. Page 1. Any questions, anyone?
About until how much for the donation to the parent?
Donation, again, you have to do itemized deduction to donate. That's another thing. They come in your office, the client, and first thing first, they bring you donations. I gave $500 to my church. Okay, do you have a home? No, I am renter. Okay, then I don't need it. Good for you, giving $500 to church or Salvation Army or whatever. But if you are itemizing, then you can say yes, because I'm itemizing, I donated $200 worth of clothing, and this is the proof, and you can put that $200 over there.
Some people, they donate the cars to the PCC here.
You get a proof for that, right? And you use that to itemize. Again, if you are not itemizing, doesn't matter what you do. The donation is part of itemized deduction lines. So if you don't have a home, like I have a home, but my mortgage is low, that means I paid less interest. Since I'm paying less interest, starting, I think 2 years ago, I'm not using itemization anymore because standard deduction is higher than my itemization. So it doesn't matter if I have a donation or not. Before 2 years ago, I was thinking, okay, donate this, donate that, but now it doesn't matter. Okay, so let's go back to the book. Oh, I was watching the line that I told you about this. If you like to become an enrolled agent, Gleim is a good source to even CPA exam doesn't matter. If you want to become a CPA or enrolled agent or any other certification, Climb is having good, affordable study material, and you're gonna get Climb Part 1 for enrolled agent individual taxation from this course. So you have free access. Make sure you register, and you have quizzes over there that I made it for you. So you have to do those quizzes, and those are 350 points out of 1,000. But I was watching, and it was good. So it took me through. There was a lecture video, so I watched the lecture video, and after lecture video, it went to multiple choice questions and explaining and showing why this answer is wrong or not. I could have put notes here. There were study page that I need to study, and there was also note next to it, so I could have take notes. So it was good. So I study material and, you know, video instructions, and you can go to test bank and, you know, practice test. And you need to practice a lot. For CPA exam, I practiced thousands and thousands and thousands of test questions, literally 24/7. Doesn't matter, I'm in a wherever I am, including bathroom, driving, whatever. I was doing test after test after test after test, no matter what. So test. And that's how you pass. So same thing in here. So if you want to pass, you have to work hard on that and make sure you get smarter. If you don't practice, you get rusty. So if I want to take this test again, guess what? I have to practice, because it doesn't matter how much I know, I'm rusty for taking the test. So specifically a test that when you go to Prometric, you cannot say, oh, can I take my book with me and I need to check or Google it or something? No, it's just you and a monitor and taking the test. So it's I was watching, it was wonderful, I enjoyed it. So hopefully you follow this, but obviously you need to go to the professor-led page and take the quiz for that, which I did show you last time. So here is the study materials that I said. You see, here is the study filing requirements. And when you click as a initial quiz to see how much you know, but then after that, you see you can have different things to do. You can read the outline, right? And learn a little bit, focus questions, watch the video lecture, multiple choice, and walk through, and so many good stuff here. So. And here it says filing status, filing requirements, dependent on earned income, non-resident dual status aliens. And you see, those are good stuff. So I really like it. Flashcards, awesome. Those are nice things to have, flashcards. Your notes, any notes you take is right here, right? Audio lectures, this is good. This is the one that I was using when I was driving the car. Obviously not Climb. I had CDs, but I was listening to those CDs for CPA exam. So bottom line, it's awesome. Here is test bank, and you can practice that. Okay, let's go to the book and see what else we can cover. So what is the gross income? Is compensation from any source. Gains from disposal of property. It can be tangible property, intangible, digital asset, whatever. Interest. If interest is municipal bond or state bond, it might be exempt from income, but overall interest is taxable. Rents, royalties, dividends. When you have stock of corporations and you get dividend, all those dividends will be reported in the report. Alimony, but number 8 is a little bit tricky, so let's go. Alimony and separate maintenance payments received pursuant to divorce or separation agreement executed prior to 2019 and not modified after 2018. Those are, if you receive alimony, it's income. So if your alimony has been executed before 2019, it's an income. You have to report it. And whoever gives you alimony, he has tax deduction because of that. But starting 2019, if you get divorced and you get alimony, you don't need to report it anymore. So you have to know when is the execution date. And person who pays you alimony, he cannot deduct it anymore. So you don't need to report your alimony, and the person who pays the alimony cannot need to deduct. Annuities, again, that's form of income from your funds that you invest in annuities. Income generated from life insurance proceeds, it might be gross income at this point, but it will be later on deducted and eliminated because it's not taxable. Pensions, again, might partially be taxable, might not, but for now it's part of gross income. Income from forgiveness of debt. So if you have a credit card and the company forgive a part of it and gives you a 1099 debt cancellation, you have to put that as gross income.
The student loans fall in that, if they forgive the student loan?
I think so, yeah. Share of this, but they are not forgiving anything right now. They were talking about forgiving, but they're not. But if the government decides, they didn't decide it yet, but if they decide to forgive student loan, they might come up with another subchapter that says, we're going to forgive $10,000 of your student loan, and that will also not be taxable income. If they do that, then it's not. So for now, we don't know yet. Share of distributive partnership income and pro rata share of S corporation income. Okay, let's talk about this a little bit. You get if you have a S corporation and you are a shareholder, the S corporation will file 1020-S form instead of 1040 for individual form. Remember, we were just looking at it will be 1120-S. 1120 is for C corporation. 1120-S is for S corporation. And what is S corporation? You file taxes for the corporation, but that is just information purposes. So a corporation says we have $100,000 revenue, $70,000 expenses. So 100 minus 70 is $30,000 net income. And we have 2 shareholders. S corporation can have up to 100 shareholders, right? But let's say here we have 2 shareholders. So 2 shareholders, 50% each. So $30,000 net income through a K1 form, K-1. K1 form, that form will go a copy to shareholder number 1, a copy to shareholder number 2. They walking into your office with W-2s and a K1 form. So K1 form shows that this is the corporation name, the percentage of ownership is 50%, and percentage of income 30 divided by 2 is $15,000. And those are in specific boxes. So you go to your software, go to K1 form, look at those specific boxes that the numbers are inside, and you put those numbers in those specific boxes. And that $15,000, now you as a shareholder, you are responsible to show in your tax return and pay taxes for it. So S corporation is a pass-through entity. Make sense? S corporation. But what's the difference with the C corp? Anyone knows? C corp. No? Okay, then I'm telling you good stuff. So here C corp is what? C corp is a corporation it's a big corporation. It's not a small corporation. S corp is a corporation, but it's a small business corporation. C corp is the default, unless you open a C corp and then you choose to become an S corp, right? So C corp, you can go one day to become a publicly traded company. It's a big corporation. You might stay private company, you might become a public traded company in future. You never know. But anyway, what is C corp? C corp, you file taxes again, 1120, not 1120S, 1120. And 1120, you show $100,000 income minus $70,000 expenses, net income $30,000, and the corporation, including filing that tax, he pays taxes for it. Let's say $6,000, 20%. So corporation will pay taxes. So far, so good, right? And then corporation says, hey, because I have so many shareholders, I want to declare some dividend and give everyone a little bit of dividend. So every one of you guys as a shareholder, get a dividend. You are so happy. But at the end of the year, you get the form that shows 1099 DIV. And you get that dividend to report it into your here, line 7, number 7 here, you see, that's dividend that you show. And because of that, you pay taxes probably again. So it's a double taxation. So if you heard what is double taxation, that's what it is. That means one time corporation is paying taxes at corporate level, and then you pay for taxes for the dividend at individual level for the same income.
The difference between an S corp and a C corp is a C corp can issue dividends then, or not?
C corp is a small business corporation. You have a C corp to take advantage of that corporate wealth, to have limited liability. But when you file taxes, you just file taxes, but you don't pay taxes. But whatever income you have, it will go pass through to shareholders, and everyone pays taxes at the level of percentage of ownership they have from that net income. So you might have an S corp. You are a shareholder in the S corp. You didn't receive anything, but the S corp made $30,000. You are 50% shareholders, you get a K1 form, it says $15,000 income, you are responsible to pay that taxes, even though you didn't even receive $1 from that S corp whatsoever. But you are responsible to pay the taxes for the income. Yes.
Which means if we didn't pay dividend to the shareholder in the S corp, the shareholders still need to pay tax?
Shareholders are responsible to pay taxes for the share of income of the corporation generated. Has nothing to do with dividend. Okay, now, as a shareholder of a S corporation, you might work in that S corporation, right? So if you work for S corporation, you get the W-2 as an employee. You are responsible to get a W-2 as an employee. And if you get W-2, that W-2 goes on line 1 compensation. Okay, so We talked about deduction for AGI already. So here is the details again. You can just go over this and read it. Deduction from AGI, we covered that also on the Form 1040. So standard deduction or itemized deduction. In the standard itemized deduction, you have home mortgage, charitable contribution, and medical expenses, and state taxes. State taxes right now is up to $10,000 anyway. Okay, what is the standard deduction? That's a basic amount that it will change every year. As you see here, for married filing jointly, it's $25,900, and you have the rest of it in here, so you can look at. If you have more than 60, I believe, above 65 years old, yes, 65. Above 65, you get additional standard deduction. Again, it changes. It was before 1350, so now it's 1400. Single head of household, 1750. So if you are married filing jointly and both people are over 65 and blind, they get 4 times $1,400. If you are single, you get just 1 time $1,750 for over 65 and another $1,750 for being blind. Okay, so standard deduction for dependent, that is again changing. It was 1,100 before, now it's 1,150 for year 22. Or earned income plus 350. So if you are a dependent and you are working somewhere as a part-time and you file your taxes to see if you can get a refund or something, your standard deduction will be normally 1,150. Not 12,950, no, because you are dependent. However, if you make more than 1,150, so it is earned income plus 350. So here is an example. Sue, single and age 74, has no earned income and is claimed as a dependent on her son's tax return. Her 2022 basic standard deduction is limited to 1,150, the greater of 1,150 or zero income plus 350, right? So 1,150 is greater. Her additional standard deduction is 1,750 because she is over 74. So she deducts $2,900, 1,150 plus additional standard deduction of 1,750 as a single person from AGI when computing the taxable income. So if she has some form of income and she wants to deduct standard deduction, this is what she gets, $2,900.
That's if she has no income, not if she has income. That's if she has no income, right?
If no earned income, but she has maybe unearned income.
That's what?
Unearned. Unearned, that means like dividend, royalties, rent.
How does the second one work? Earned income plus 350.
Let's say she worked part-time in a store as a cashier and she earned $2,000. So 2,000 plus 350, that's 2,350.
That gets to be a deduction. Money that she made gets to be deducted.
That because it's earned. Earned plus 350. So earned is 2,000 plus 350 is 2,350. plus she's over 65, so she gets another additional standard deduction of 1,750. So it ends up to be 2,350 plus 1,750.
Also, they're adding the earned income plus the 350.
Whichever is greater. The greater is greater of 1,150 or earned income, whatever it might be, plus 350. But you cannot say, oh, my earned income is 13,000 plus 350 is 13,350. No, because standard deduction for an individual person is 12,950. So as long as you don't go over that 12,950, then yes, earned
So-
income plus
So
350.
if you have a child that's working part-time and they make $10,000, their standard deduction will be $1,350. I mean, I'm sorry, $10,350.
Yes, 10,350, because 10,350 is greater than 1,150.
Okay.
why do you deduct money that someone brought in? Like, it seems like you would have to pay taxes on
No,
that
that's the
money.
standard deduction that they're using against their taxable income. So instead of like when you itemize, it's for that's your deduction against,
But it's not an expense, it's income.
but that's how they're calculating the standard deduction. We get a standard deduction if you don't itemize the 12,000. So if
What if they're a dependent and they're a child star on Disney and they made $120,000?
The child start in Disney and make,
Yeah, what if you have a dependent who made $120,000 because they're an actor?
most probably is not a dependent anymore at that point.
What about the 7-year-old kid that's on a Disney show? That's not a dependent? Or they're not considered a dependent after they make
Okay, but if you want to claim that child, because let's say you put all that money in a trust and you don't use it, and you pay for the expenses of the child, okay, then the child has earned income of 100,000 plus 350.
Okay.
But standard deduction, that goes over the standard deduction.
And you can't go over the standard deduction?
No, you cannot pass the
Okay.
12,950 standard deduction. So the child will file a tax return, shows $100,000 income. The standard deduction will be,
Well, that's why then, because the child has to file their own tax
yes,
return, so that's why it's being deducted off yours then in theory, I guess.
and the child will pay, file your own tax and,
Okay.
yeah.
Yeah, for tax purposes, they're not really a dependent at that point because. Or they
Again,
could be, but at the standard deduction.
but they have income, so they have to file taxes.
Yeah.
Dependent has to file taxes, right? So it's gonna be maybe $10,000 of income, that's fine, you still file taxes for dependent.
Right.
So if I have a client coming in says, let's say, this is my wife, and I have a, let's say, 16 years old child working somewhere, making some money. I said, okay, we gotta file your taxes, but ask your 16 years old to come back with his W-2 and we file his taxes also. And at that point, we go with these deductions. Of course, the software will do it for us. I'm not gonna enter anything like that. I'm just gonna enter the W-2 information and the rest of the questions. Did someone claim you as a dependent? Yes, right? All those questions are important. So then, as soon as you say, yes, someone else did claim me as a dependent, then this scenario starts to kick in. The software says, okay, so this is a dependent, but has some income. Let me see what I can. Okay. So I'm going to go to next page, but there is something here that says worksheet for 16 years old Gloria. Parent claimer as a dependent. Gloria has perfect vision. She earned $1,400 working part-time during the year. Her standard deduction is $1,750. And why? Because of this, let's see. Yeah. So $1,750 plus no, 1400 plus 350 is 1750. 1750, the greater of 1150 or 1400 plus 350, which one is greater? So 1750 is greater. So also 1750 cannot be more than 12950 anyway. Make sure that's definitely that is the maximum threshold anyway. So which one is less? Is this 1750 less or 12950 the maximum threshold? So 1750 is less. We're gonna use that, and that is the because it's not more than 65 or line, so there is no extra additional standard deduction. So 1750 is the case. That will be the standard deduction for Gloria. Gloria comes to our office, we file taxes, and we will have standard deduction. So most probably in this case, what I'm gonna get for Gloria is, I'm gonna show that Gloria has $1,400 income. I'm gonna show that Gloria has 1750 standard deduction, therefore zero taxable income. But I'm gonna look in the W-2, and I see in the W-2 there's a tax withholding of $120. So I'm gonna use that opportunity and get a refund of $120 for Gloria. That's why when Gloria's parents were here, I said, I'm gonna file your taxes, put Gloria as a dependent, but go home, ask Gloria to come back next week with her W-2 so I can file her taxes, and hopefully I can get something for her. And if there is any withholding in a W-2 for federal tax or even a state income tax, I will hopefully get the refund on it. So that's what you do for your clients. So, exemptions for now until 2025, we don't have exemptions. Personal exemptions before was $4,000, but now is gone. But because of that is gone, your standard deduction is doubled. So right now we have higher standard deduction, but no more personal exemption. Before, personal exemption was $4,000 each person, but now we don't have it. Oh, it says 4,400, but well, we don't have it anymore. Qualifying child. And here it says who is qualifying child, relationship test, age test, residency test. So I want you to read this because it can be a little bit, complicated, but you need to know the general information. If you are using a software, you answer those questions. They are questions for you to answer for qualifying child, and you can use that to identify. Other than that, it's just by itself. So that's good enough for chapter 1. As you see, there are some tests for residency test, more than half of the year. You see, more than half of the year for your child should be more than half of the year. But don't forget, if child is going to college somewhere else and she's not living with you, that's fine. Then that's still your child and your dependent because she is going out for school. So this rest of this chapter, you're gonna read. If necessary, to come back to look at it. Let's take a break and come back for lab because on Thursdays we're gonna have a lab. Okay, so we went over chapter 1 already. You can read the rest of the chapter 1 for more details and probably read it a few more times if necessary to get the idea of who's gonna be your dependent, what is the qualification, and also other dependent. I suggest for lab hours, since I'm trying to kind of teach you not only just the rules a little bit here, also to teach you the actual tax side of it, working on the software. I said go to, I have the resources in your canvas. Remember I said resources. You can go over there, but this is where you want to be. You can Google it. Google a link and learn. Link and learn. And here is the website that belongs to IRS. Link and learn certification.com. So in the link and learn certification.com, you need to get certified to do volunteerism. And I told you that you need to get 2 certifications for interview, for standards of conduct and advanced. So you're gonna skip basic and go straight to do advanced certification. And I told you the practice lab, you can go and prepare fake tax returns. So this is a very good software to do fake tax returns, scenarios, and try to learn how to do it. Did you manage it? Can you go to Canvas now? Go to, okay, for now, watch over here with him and then I help. So this is the practice lab. Link and learn taxes, they have lessons, obviously same things that we are trying to learn. You have a form of lesson also here, so you can use that. This is the certification test and retest PDF. That means this is where you have access to the test questions for the certification. And in case you fail, you have a second lifeline and you get a retest questions, which is very similar to the test questions, with a little bit, very minor differences. So you have 2 lifelines to get certified for either one of those certifications. So the questions are provided to you. All you need to do is just have those questions ready, look at the scenarios, answer the questions. Some of those scenarios you need to prepare tax return, at least for advanced level, I believe you need to prepare maybe at least 3 scenarios. And that means you have to prepare the tax return in order to answer those questions. There are other scenarios that you don't need to prepare tax return. All you need to do is just look for the documents, publications that you have and try to answer those questions. But there will be at least 3 scenarios that you need to prepare tax return. And after you prepare tax return, you know the answers. After you have the answers, then you can answer the questions and then take the test. So you prepare all your answers before you take the test, right? So you know already what the question is. You know already what the answer is. Since you prepared them, all you need to do is just spend literally 5 minutes to take the test. If you standards of conduct training, you see this here, there is a link to have standards of conduct training. If you want a training on that, spend a little bit time, that's the training, standards of conduct. But overall, the questions are not hard. The standards of conduct test questions, it's in here, right there. Intake interview training is right here. So if you like to have intake interview training before you look at the questions and then provide the answers, you can have a training right there. So you want to become certified for VITA program, literally so you can get experience. And this is very important because taxation, it's all about experience. Doesn't matter how many certificates you have in here, advanced or whatever. If you don't have experience, you are so scared to the point that some students, they run behind this wall and they hide. So if you take accounting 106A and 108A at Pasadena City College, you will be a different person at the end. So that's why I tell them, if you tell students, if you really like yourself, take a picture, whatever you like, make a video of yourself, because you're not gonna be the same person at the end of the program. You're gonna go to the next level. The person who was hiding behind these walls, after that 3 months, 4 months period, they walk like a professional, they dress like a professional, they talk like a professional, they act like a professional. You will totally change. So doesn't matter, you don't think, oh, because I took this book, I read this book, so I'm good. No, you have to have experience. Okay, so let's keep going. And if you are enrolled agent and you do white-up program as a volunteer, you get CE credit. And here is the link that is talking about CE credit. So if you get advanced plus one more certification on another subject area, you will get up to 18 hours of education credit. If you do volunteerism and you are only certified for advanced, you get up to 14 hours of continued education credit. And if you are an enrolled agent or CTEC or CPA or whatever, you always need to have continued education on an annual basis. Yes.
Would I be a volunteer now? I have a CTEC license. Or does that have to go to a class at PCC?
To become volunteer?
Uh-huh.
Depends where do you want to become volunteer. There are so many places that they take volunteers.
Oh, okay.
If you are certified, not CTEC. I am white-up
Oh, okay.
certified.
No, through the school, just to get practice and experience.
And college credit
Right.
in Pasadena City College,
Yes.
then you have to take the course.
Okay.
Take the course, take the class, do the volunteerism, you get college credit, you get volunteerism.
Okay.
Okay, so now, let's say you have to first open your account. So that's one thing you need to know. Remember I said you're gonna have a lot of username, password, blah, blah, and make sure you write all of them down properly, because every single time I'm gonna say, no, log in here, log in there, and every time you're gonna say, oh my goodness, what was my username? What was my password? So you have to be very, very organized on that. And you have to put it in like I put in my cell phone. So now I want to go inside here. I have to know where I'm going. So for practice lab, here is the there is a password. I'm looking to see if I can see the password here. Here, right there. Train ProVet. Okay, Train ProVet. You have the password for practice. Now you need a username and password to sign in. If you don't, you need to create an account. So please go in here, try to create an account for the practice lab. And if you have any questions, then I will help you on that. Okay, so I'm gonna, for a second, I'm gonna pause recording so you can go ahead and create an account. Okay, so we are in practice lab. I am on my Zoom. I'm sharing my screen. And there are few things that here you can use, and we will get back to these videos later on, which is awesome.
Write down the password. that
So
you did.
one thing that you can do is just go to practice area and be in the tax software.
Go back
Voila,
to Zoom
this is,
Right now,
huh?
go back to Zoom.
Yeah, go back to Zoom and watch what I'm showing you. Yeah. Go back to Zoom and I click practice lab and now I am in the practice lab. The actual tax software, tax layer is exactly like this, but it's not practice. It doesn't say practice lab. So that's the only way you can identify, are you in the actual software or you are in the practice lab? And so we are in the practice lab. That's good. So if I wanted to start a tax return, I click start. The moment I click start, it says, okay, perfect. You want to prepare a fake tax return? What's the social security number? You have to enter that. And you can just click start return, or you can update the profile a little bit here, right? So normally I don't do anything in here. I just do the social security and I start return. And that's how I go to software and do the rest of the things, including names, date of birth, address,
Where are you
dependent.
getting all that information and all that from to practice?
Yeah, you will get scenarios.
Oh,
It's-
they will give it to you.
It's in your book. It's,
So-
yes.
So when you just start here and you're putting in a social security number, you're putting in a 555
Yeah, for the fake tax return, this is the practice lab. We enter a fake tax social security number. If the fake scenario gives us the number, we use that.
I guess I don't know where the scenario is coming from.
Again, let's say if you go to your book,
So in the book.
let's say you go to end of chapter 4, you will see there is a comprehensive scenario and you have to prepare tax return, and that will be maybe a quiz anyway. So you will go and prepare the tax return in the practice lab. Okay, so that, for example, that comprehensive problem, if you go to maybe chapter 4, I believe, at the end of chapter 4, there is cumulative problem, chapter 1 through 4. That's a cumulative problem. So
So
that's,
we'll use this to do those problems in the book.
yes. And that might be a quiz anyway for you.
Mhm.
That means you have to come here, spend time, prepare the taxes. And then since you have the tax ready, then you go to quiz and say, okay, quiz says, how much is your taxable income? Because you prepared it, you know how much it is, you enter the dollar number and you get points for your quiz. Okay? So for now, I'm not gonna do it, but this is the practice lab that I want you to understand. If you are preparing a tax return and you can't finish it today, just save it, exit, and next time come back here, go to search client, enter the social security number that you entered or client name, and you will find that client. So if I click here, client search, it says, okay, what's the client search? And you see here, I have one Kendall King. So it looks like I did this before, and it says status in progress. And so I have the phone number, I have social security numbers, and I can, if I want to work on Kendall still, I select Kendall and I go and continue finishing that tax return. Make sense? So back. I'm back in here. And here you have some menus that you can use down the road if you want to have access to a specific, like main menu or something. But for now, this is how you go to practice lab. So now, if I go back all the way, processing,
Yeah, you have to put that research and responsibility really important.
Okay, leave it this here. So now I am back to Lincoln Learn, but before I go on the left side, show you the certification things. I'm gonna do that next time because today we are out of time. But for now, I'm gonna just go one more time here, tell you what was here. In the middle, it says classroom presentation, lesson plans. Let's say lessons for Lincoln Learn tax lessons, if you want to learn lessons. Certification test, retest, those are publication 6744. So let me click on that. Hopefully that's still working. Okay, there you go. So the zip is open. That's publication 6744. Write this down if you like. So I'm gonna just, instead of opening this, I'm gonna Google it for you. So go to Google. I say pub 6744 and click on that. And here is your final exam questions, but this is 2022 again, right? So if you want to kind of see if you can get certified for 2022 for having fun, why not? Here is your question. But later on, this will be after November 15, this will be 2023, and that will be your final exam. So this is just for you to practice for sake of practicing. And just to test yourself to see if can you pass this or not, because the software is there, scenarios are there, software there, scenario there, questions there. Can you pass it? If you pass it, that means good news. Congratulations. In November 15 and later on, you will do in 2023 again. So here is if you
But
go,
if we don't pass it, at least we have an idea.
at least you have an idea, but I messed up in 2022, so I better listen to my lectures carefully and read the book carefully because apparently I am missing some information. Okay, so if you go to 6744, you have all the scenarios. So the first test you want to have is volunteer standards of conduct test. So you need to have that test, and that test either is test number 1, right? That's retest. That's the test. So test and then retest. So you have 2 lifelines, right? So you know what the question is. All you need to have is just have a piece of paper, have your answers ready. Because when you take the test, it takes you 3 minutes to take the test because you have all the answers ready. Make sense? And then you take the interview quality review test questions. And that will be, again, you have the answers ready, take the test, 3 minutes, done.
Where are you getting the answers from? From watching the lessons, you mean?
Yeah, there is a training. Remember I said there is a
Yeah,
training?
I just don't understand. Like you say, are we like looking at these questions and writing the answers down and then doing the 2023 test?
You look at those questions.
Look at them in here, write them down.
Yes,
then
and you
take
say
the
question
test.
number 1, my answer is
Okay.
A, true. Question number 2, my answer is B, false.
I see you're saying look at it on Google, that form, this PDF, and then go back into the program and take the test.
Yes, look at here. This is your questions.
Yeah,
The
okay.
questions are.
So questions are not hidden. I give you the test questions ahead of time. Here is the questions. All you need to do is just have the answers ready. And then here, let me show you. It's not a big deal. Here, click on this. Okay, question number 1. Using your resource materials, answer the following questions, right? So you have the resource materials for Vital Lincoln Learn. You have the training for the interview, standards of conduct training video. Remember I said to watch the training if you like. And there's a publication for it if you want to read the publication. And then based on that, you say, okay, prior to working at Vital, side, all White volunteers, greeters, clients, tax preparers, quality reviewers must A, annually pass the volunteer standards of conduct certification with a score of 80% or higher. Sign and date form 13615 volunteer standards of conduct agreement agreeing to comply with volunteer standards of conduct by uploading the highest ethical standards. Pass the advanced tax law certification, all of the above, both A and B. So what's your answer? What
A
do
and
you
B.
think? Huh?
E.
E,
Yes.
right? Being
I
advanced,
passed, that's it.
no,
Did I get it
yeah,
right?
being advanced is not necessary. You might just get basic.
So in this case, the answer would be E.
E.
Okay.
So that's correct answer. So you take a paper, you say standards of conduct questions, question number 1, answer E. That dot both A and B. That's it. You can even write the questions if you like, but other than that, just say both A and B. You can even print this page if you like, for God's sake. Right?
And then we can practice it over and over again, unlimited? Like
You
if I-
can take the test twice. You have 2 lifelines to pass
Okay.
this.
All right.
So you want to make sure your questions are good. Think about it before you take the test. And one thing, be careful about this. Remember this. It's not written anywhere. When you take the test, you get a window opens and it gives you the feedback. And feedback says question number 1, correct. Question number 2, wrong. Question number 3, wrong. And normally gives you a little bit of hint why was wrong. Maybe a little bit. Or gives you a link, says, go read this area. Looks like you don't know what you are doing. Anyway, that window, take a picture of it. Because the moment you close that window, there is no way you come back to that window and say, I lost my feedbacks. Why? If someone says number 2, 3, and 5 is wrong, why do you want to close the window and then you forget which one was wrong again? Right? But if you know at least which one is wrong, on paper you have all the answers, right? You know number 1 was correct. You know number 2 was correct. You know number 3 was wrong. So think about it. Why number 3 is wrong? Make it a different answer. Have it ready to take your second test. So taking picture of that window of feedback is very important because if the window is too big, because the questions are too many, okay, take a picture of half of it, roll it up, take a picture of second half. And then go to your paper, see, okay, number 2 is wrong, number 3 is wrong, and number 5 is wrong. That's what I
in the
feel.
exact same order? As this?
As this.
Oh, okay.
I mean, they cannot make it easier than this, right? Specifically standards of conduct and interview, it is kind of common sense. It's not like rocket science.
Yeah.
That's why with a basic training video watching, you are good to do it. The challenge is the advanced, because when you want to do the advanced, then you need to learn these things.
You can take the 2 beta classes without ever doing this class then, right? And just be a volunteer. Some people do that.
What was that again?
I was saying there's 2 Vita classes, right? The
Right.
107 and 108 or whatever.
106 and 108 in Pasadena City College.
Right.
Yes.
So you can take those without ever taking this class,
Yes.
correct? Yeah.
Yes. Because
But this class.
in
you would say-
106, 108, I might go about half of this at the max. Okay? Not the whole book, not 13 chapters.
This class is more advanced.
This class is more about these rules. So we're gonna go a little bit deep inside and go to boring stuff in middle of that things. But in VITA program, I prepare you in matter of 5 weeks to get the job done. It's a boot camp. I'm not gonna go through heavy duty stuff. But here we're gonna go through heavy duty stuff that even I am trying to see, okay, how can I explain this? It's hard too much vocabulary, let's go to an example so I can explain. Because when I'm trying to read the vocabulary, it is heavy and you're gonna get lost. You say, what? All right? Specifically when I am reading it, instead of you read yourself. So it's easier if you just focus on the examples and say, okay, this is what it's trying to say, but obviously you need to read it yourself. But examples is helping you to grab the idea. But in VITA program, we have specific type of clients coming in, a specific type of taxes. So it's easier to just go over that as in matter of 5 weeks. But when I say 5 weeks, we are talking about 12 noon through 7 p.m. So that's what I say, 5 times 7. That's 35 hours by itself. Okay, so you know now what the questions are, what the answers should be in your paper, and then you take the test. So this is the publication. Again, you can Google it. Publication 67. And also, oh, by the way, you see here is retest answer sheet. You print this, and then this is test answer sheet. So you go to advanced, let's say, and you say advanced scenario, question number 1. The correct answer is A, whatever. And then number 2 is B. So you can literally put your answers in here, have it ready to take the test. And here is test retest for, let's say, you're not gonna use that. Not gonna use standards of conduct. Yeah, very good. Here, standards of conduct. So standards of conduct, you have 10 questions, have the answers ready here. Interviewed questions, you have 10 questions, have the answers over there. That's it. And you will pass. So you have the answer sheet, you have the questions, everything is right here. Publication 6744, write it down.
After November 15, right?
After November 15, I tell you, we will check. As soon as it's updated, after November 15, I will tell you guys, hey, looks like 23 is up ready. So go ahead and start,
Taking these tests?
taking this test. But for now, if you like to do it, let's say next month, you are still in 2022, it's a practice for now. Good for you, pass it, but
But I can take 3 or 4 practice tests, or I'm only limited to 2 practice tests.
for
That's
2022,
Yeah.
again, you have either 2022, 2023, 2024. You have 2 lifelines.
Okay.
Got it?
Okay.
You have 2 lifelines. Okay, where are we? Here, that's 6744 that I was telling you. That's right there. Training guide for, it's training. Training for what standards of conduct is here. Training for interview, it's here. And practice lab is here, which I told you where to go to practice lab, right? And since you are in practice lab for this week, I would like you to do this for me, if possible. So go to practice lab, and those are good stuff in here at the bottom, but I suggest if you want to study any of those topics, that's fine. But I suggest go ahead. We will watch it together also, but I suggest go to webinar number 3 and webinar number 4 and watch this guy doing tax return. And he's teaching you. So instead of me teach you and waste so much time in here,
3 and 4?
yes, he is teaching you. I will look at it with you if I get a chance and time to give you a little bit more information if I, come to that point, say, oh, by the way, stop. Let me explain a little bit more here and stop here, explain a little bit more. But for now, because I want you to get a little bit more savvy as soon as possible, that's what I suggest for this week. Even with this level of information and just chapter 1 that you learned so far, still go ahead, and watch this guy doing tax return, explaining to you how to work with software and getting that experience. So when we are talking about this next time, you feel more comfortable with the, you have more confidence, more knowledge, instead of just looking at me like I'm from another planet. Okay, we are good for now.
Yeah.
Next time, I'm gonna go here and ask you to create an account, and we do it together again. I make sure that I can make sure everyone is on this page with an account, because if you don't have an account, you can't get certified. And one more time, I told you 100 times, I'm gonna tell you one more time. Every single page you go and you have a password and user ID, write it down. What page, for what purpose, what is the username, what is the password? Because I think if you go to, as far as I remember, if you go to certification test, if you create an account and you get into account for the first time, I think it says change your password. So after you write all those, you might change it again. Anyway, so see you next time. Okay, bye-bye.